What's going on, YouTube family? It's your boy Billionaire Brick back with another video. Now, in this video, I'm going to be talking about gold. I simply did not trade this, but I marked it out for one of my friends that's in my partner Discord. He trades gold. So basically, the story behind this video is I trade London session. So I trade between 2 to 5 a.m. EST New York time. He trades London session as well with us on the Discord, but I trade US 30 only. I don't trade no other chart but US 30. He trades gold only. So I was like, I didn't want him to feel like he was left out alone, because like when we all hop on, everybody trading, US 30, and then he's the only one trading gold. So I'm like, do you want me to mark out gold and give you my opinion based on my perception? And he was like, yeah. So basically, moral of the story is, after I marked it out, I was like, oh my God, I may need to start trading gold because it has very good structure and it conforms to my strategy very neatly. So I'm like, should I start trading US 30 and gold? I told him from now on, I'm going to trade US 30 and gold London session. So I can be marking out the chart with him, and me and him can be trading gold, and I can also be in a position with my boy LH trades on US 30. And we all going to be locked in together. So basically, believe it or not, I literally marked out the chart for him, and I would say about 3 minutes. Like, it doesn't take that long for me to see what's going on. So I started off on the hour 4 time frame, and I drew out my fair value gaps. I seen that price was obviously going up, so I was looking for any bullish fair value gaps that was near price. So you have 1, 2, 3. So this third one right here, that's the most recent bullish fair value gap. So I went down from the 4 minute to the 15 minute to simply look at the structure of market, but also to draw out my parameters. I like to have my parameters. And also I went to this time frame to draw out my session highs and lows. So basically, this is my trading parameter. I have to enter between 2 to 5 a.m. This is called a kill zone. That's step 1. Step 2, after marking out the parameters, I marked out Asia's high, which is right here, Asia's low, which is right here. So we all know my trading strategy is very simple in London. When London opens from 2 o'clock, you want to see, is price going to take out Asia's low if you're looking for a buy? Also, or you can look for, did it already take out Asia's low? So as you can see, it took out Asia's low at 145, and it came into this hour 4 fair value gap right here. So once I seen that it took out Asia's low already, and it's 2 o'clock, now it's showtime. So I go to my entry time frame. I have really 3 entry time frames. I either enter on the 5 minute, the 2 minute, or the 1 minute. It all depends on how I'm feeling. So since I never traded this chart before, but I was simply marking it up for him, and I didn't know if he was going to take my opinion or not, I simply did it based off of the 5 minute. Because a fair value gap on the 5 minute is better than a fair value gap on the 1 minute. So I was like, okay, since I never traded this, we're just going to keep it on the 5 minute. We're not going to go too crazy. We're not going to go too low. You get what I'm saying? So basically, when I went to the 5 minute chart after it was swept, it's 2 o'clock right here. It already swept the low. So my strategy is, after Asia low is swept, I go down to my entry time frame, and I simply wait for a high to be broken on that time frame. So as you can see, this swing high right here, a high with 2 lower highs on each side, it was broken right here. You see that? And once it was broken, price created a fair value gap right here. Now we all know that I teach that if the extension leg that takes out the high has multiple fair value gaps in it, like this one, it has 2. How do we know which one to use? We always use the last one that was created. The reason why is because we do not know if it's going to come down to the first one. As you can see, if you would have been waiting for price to come down to this first one that was created, you wouldn't have got an entry. you always use the last one that was created. That's called the first line of defense. So I basically marked it out for him, and I told him this is what I see. I told him I can see it bouncing off of this 5-minute fair value gap and taking out Asia's high since we took out the low early. I did not say, now even though, let me tell you, even though price eventually ended up coming up here to take out this high on the hour 4 time frame, that wasn't a part of my analysis, simply because we are scalpers, meaning we look to get in and get out. This trade took about 2 hours to pan out. I don't like to hold my trade longer than an hour. That's why I enter on the 2-minute, because you get a better risk to reward ratio and you can get out sooner. So this trade would have took about 2 hours to pan out, but he would have got his target right here at Asia's high. He would have entered down here. I don't know what that risk to reward ratio would have been, so let's see. 2 places you can put your stop loss. You can put it at the low of the second candle or the low of the first candle. If he would have put it at the low of the second candle, he wouldn't have got stopped out, and he would have got a 4-to-1, a 4.6-to-1. And if he would have put it at the low of the first candle, he would have got a 2, basically a 2-to-1. So as you can see, if you have precise stop loss based off of logic, you don't have to worry about price coming to stop you out, and your stop loss can still be tight, and you can get a good risk to reward ratio. So instead of having a 2-to-1 putting your stop right here, now you have a 4-to-1, risking $100 to make $400 instead of risking $100 to make $200, and it all happened within the same time span. Isn't that pretty cool? So let's go down to the 2-minute chart and see. This is my original entry time frame, so I basically want to see what happened on the 2-minute. So we have, let's erase this. So on the 2-minute, the high was broken right here, and we got all these fair value gaps in this leg. We got multiple. We got this one. I'm not gonna draw out all of them. I'm just gonna draw out some of them. We got this one. And then we got this one. So in this case, as you can see, price came down to the first fair value gap. Honestly, if you would have entered based off of this first fair value gap, based off of where I put my stops, I would have been stopped out, because I put my stops below the first candle or the second candle. So I would have been stopped out. But once price entered this fair value gap, I would have waited to see at least leave it before I just entered, simply because it had this big old expansion leg. So I'm like, price not finna just come into this 2-minute fair value gap and just take off. You know what I'm saying? We got to be logical. So I would have waited to see it pump off. And once it broke this one and started breaking through it, I would have simply deleted it off my chart. I would have simply deleted it, and I would have had this one right here. So I would have been like, okay, let's see if it's going to conform off of this one. Price would have came into this fair value gap. I would have seen it wicking it. You see these bottom wicks wicking into it. I would have been like, okay, it's dancing on top of it. It's basically using it as support. So we're going to go higher from this specific fair value gap. So would have entered right here. Could have put my stops below the second candle. The way I trade, I know I am liable to get stopped out a lot simply because I have tight stops. But also the way that I trade, I can catch a 10-to-1 in the same trade, but other people would catch a 2-to-1 or a 3-to-1 because of their stops, and I can catch a 10-to-1. So it's like, as you can see, I would have entered right here on the 2-minute, and I would have aimed for the same high. Aim for that high right there. And as you can see on the 2-minute chart, it ends up being an 8-to-1 instead of a 4-to-1 or a 2-to-1. And even if I put it right here below the low of the first candle that makes the fair value gap like I supposed to, it's still almost a 5-to-1, meaning risking $100 to make $500. Or we can go right here with it to the low of the second candle. it's a 8-1, guys. Meaning if I would have risked $100, I could have made $800 in the same time span of somebody who has a bigger stop loss based off of the 5 minute chart and only having a 2-1. Isn't that crazy? That's crazy. So this was basically my analysis for gold. It ended up panning out extremely decent and lovely. Like, I love the structure of it. I like how it conformed. It was very simple. Like, it wasn't a tricky trade. You get what I'm saying? Like, it was a very clear buy me, buy me, buy me type of trade. Like, it wasn't no confusion. You get what I'm saying? Like, once that high was broken, it wasn't no confusion at all, which is pretty cool. So once that high was broken, came into this 5 minute fair value gap. And then it's like, if you trade my strategy, my entry strategy off the 5 minute fair value gap, you're more liable to, like, you increase your chances of not getting stopped out versus the 2 minute. It's just that if you do it on the 2 minute, you increase your chances of having a bigger risk to reward ratio. So that give you all something to think about. So it's like on the 2 minute entry, you may be liable to get stopped out more than the 5 minute. But it's like on the 2 minute, I like trading it because the better risk to reward ratio. So it's like, instead of having a 1-2 or 2-1, I have an 8-1 in the same time span. And it's like, you got to think about this. I would rather be stopped out. Let's say I get stopped out 3 times in a week. Like, if I trade this strategy, I might not get stopped out no times in a week, but all my TPs are like 2-1s versus trading on the 2 minute. I'm catching 10-1s, risking 100 to make 1,000. And let's say I get stopped out 2 times or 3 times more than trading on the 5 minute time frame. It's actually better because it's like I'm making more money overall. How do you think you would feel if you're placing a trade and every time you place a trade, you know you're finna make 8 times what you're risking or 10 times what you're risking? When you lose 1 or 2 trades, you're not really gonna be stressing. You're not gonna be thinking you can't trade because you know, I lost $100. I'll make 800 on the next trade, or I lost 100. I'll make 1,000 on the next one. Versus risking 100 to make 100, or risking 100 to make 200, a 2-1. You get stopped out. You think you get stopped out, or you go on a losing streak. You gonna feel like you can't trade when in reality you can. You just need a higher risk to reward ratio. Some people's strategy needs a higher risk to reward ratio. Like the 2 minute chart with my entry, I can't be hopping out at no 2-1s when I know I can be getting 8-1s, 10-1s, even 15-1s, risking 100 to make 1,500. I need to maximize on my strategy. This is my strategy, and it needs to be maximized on. You get what I'm saying? For any upcoming traders or anybody who's been trading, really speaking to any upcoming traders or traders who just became profitable, maximize your strategy. If every time you place a trade and price hit your TP and you come back to the chart an hour later and that shit is like fucking 800 pips higher, and you could have ended up getting a 10-1, but instead you settle for a 2-1, you need to find out a way to maximize on that strategy. You need to go to the higher time frame. You need to see what's going on and see what you could have did better. See how you could have trailed your stop loss all the way up to that 10-1 TP without getting stopped out. You know what I'm saying? Find out a trailing strategy to trail your stop loss. You know what I'm saying? An exit is just as important as an entry. You see how this is my entry? This is my entry strategy. The exit is just as important. So my exit strategy on this trade was to get out near Asia's high or at Asia's high. And it panned out beautifully. See? It panned out beautifully. So you want to make sure you having an entry strategy and an exit strategy. As you can see, let's say I would have aimed for this high up here. This is a high on the higher time frame. It's just over here to the left. I would have got stopped out right here before it came in my direction. So it's like you just got to find out like how you want to trade. You can trade this to Asia's high and get out. And then New York session at 8:30, we look for a sweep of a low anyway. It came back and it swept. It swept this low right here. Let me get rid of this fair value gap. So New York session is 8 to 11. We traded 8 to 11. But I don't even trade New York no more. I trade London only. So basically, New York session, we look for the same thing as London session. But we look for, let me show you. So we got, this is London's low right here. That's London's low. So in New York session, if we looking for buys, we want to see price take out London's low. Just like how in London, when we was looking for buys, we wanted to see price take out Asia's low. You get it? So when you trade in London and you looking for a buy, you want to see price take out Asia's session's low. And if you in New York session and you looking for a buy, you want to see price take out London's low or previous day's low. So as you can see, we trade between 8 and 11, but we look for the move to happen at 8:30. And as you can see, 8:30 on the dot. Literally. I'm being very literal, you guys. 8:30 on the fucking dot, man. 8:30 on the dot. Just like right here, for London, it's 2:30. We look for 2:30 to start looking for price to start, showing us something. So 8:30 on the dot. We got that London's low sweep. A lot of people is selling that. A lot of people putting their stops up here. As you can see, they clearly got stopped out. So how could you have capitalized on this move? So we broke London's low. My entry time frame is the 2 minute. So this is what I would have done. I don't know if I would have got the trade, but I would have went to the 2 minute. And then I would have probably went for an aggressive buy because let me teach y'all something. Price did not break this high right here, but it broke the body's high of that candle. So a lot of people don't teach this, but you can low-key use this as a break of structure. You can literally use this swing breaking this candle's high and this candle's high as a break of structure. Because if I was to take this wick away from this candle, it would just be this candle right here and down. Like, let me see if I can do that so I can show you all. I'm teaching y'all some deep stuff, man. Teaching y'all some stuff that they ain't gonna never teach y'all, bro. They're not gonna never teach y'all what I'm trying to teach y'all. So let's see if I can black this out. Oh, fuck. Fuck. I thought I could black it out, bro. But I can't. I could just darken it. But basically, let's say you don't see that wick right there. Damn, I wish it was a way that I can put something over that shit. But let's just say you don't see that wick. You get what I'm saying? This the body. That's the body that broke the bodies. You can use that as a break of structure. This is not a fair value gap. This is the only fair value gap in the leg. So on the 2 minute, when price comes into this fair value gap, you can buy it. Where would you put your stop? You can put your stop below the second candle's low or the first candle's low. So we buy right here. If we would have put, actually, if we would have put our stops below the second candle's low, we wouldn't even have gotten stopped out Let me make sure, cause I don't want to lie. Oh yeah, we would have got stopped out. If you would have put it where you supposed to, which is right here, you wouldn't have got stopped out. And I would have wanted to trade this trade based off market structure. So I'm like, okay, we came and took out London's low. You know what I'm saying? We got London's high right here. So you can aim for London's high. This is an area that you can aim for. You can aim for right there. You can aim for London's high, or you can aim for this swing high right here. Now, if you all, let me go up to the higher time frame so you can see what I'm talking about. Cause I know y'all like, what is that line right there? Like, what is he talking about? So that line is simply just this, that high right there. You see? You could have aimed for this swing high right here as well. Because it came into this hour 4 fair value gap. And you could have expected price to take out liquidity above this high. That's the context. So go back down to that 2-minute time frame. And basically, we're gonna basically look at the risk to reward ratios to see what was going on. Okay, so the first one, if we would have aimed for London's high based off market structure, we would have got a 1-to-1. That's a solid 1-to-1. Could have risked 100. You could have risked 500. You could have risked 1,000 to make 1,000. I don't want you all to get caught up on the risk to reward ratio too much. I would just get caught up on mastering the strategy to the point where you're willing to risk more money, to where if you aim for a 1-to-1, you can risk $1,000 and know that it's going to hit it. You understand what I'm saying? Versus worrying about catching big moves. I catch big moves on a 2-minute chart because I master my strategy and I know that I can enter on that time frame while also entering at a higher time frame liquidity area, which meaning I can attack opposing liquidity areas on the higher time frame, giving me bigger risk to reward ratios. But for somebody who's just starting off with the strategy, I would definitely just simply aim for. You can practice by aiming for market structure, like London's high and stuff like that, like based off the structure of the trade, or you can just do it based off of 1-to-1, meaning like whenever you enter, no matter what, you're gonna get out when price gets to whatever you was risking. And I feel like that can build you like a solid base on the strategy. So aim right here would have got a 1-to-1. And then if you would have aimed for this swing high on the hour 4 time frame, which is something that I would have been looking for, you would have got a 2.48 to 1, which is pretty cool. Now, let's go to the 1 minute. The lower the time frame, the better the opportunity is for like having a better risk to reward ratio. As you can see, sometimes I use the 1 minute for entry. As you can see, on the 1 minute when price shot up and started retracing, this is the only fair value gap that was created in the price leg. So you actually would have been entering at a better price because it's lower. And you can get fancy with it. You can enter at equilibrium of the fair value gap, meaning the midpoint, which is like right there. It's the midpoint. And you could be like, when price gets to the midpoint of this fair value gap, I'm going to enter. And you can put your stops below. So you can enter at the midpoint. You can put your stops below the first candle that makes the fair value gap low, right there. And you can aim for London's high. So on the 1 minute, you would have got a 1.92 if you aim for London's high. And then aiming for that swing high, you would have got a 3-to-9, almost a 4-to-1. which is pretty crazy. Which is pretty sick. It really all depends on your entry. Like some people like to enter when price gets to the bottom of the fair value gap. Some people like to enter at the midpoint of the fair value gap. Some people like myself like to enter at the top of the fair value gap to secure my entry. Now, each one of these entries does not matter. It doesn't matter if you get in right here at equilibrium. It doesn't matter if you get in at the low. As long as you get in, I feel like to keep things simple, you should just simply get in when price touches the fair value gap. That way, you don't have to worry about missing a trade because sometimes price is not going to always come to equilibrium of the fair value gap. Sometimes price is not going to always come to the bottom of the fair value gap to fill it in completely. So to secure your entry, it's best that you enter at the high of the fair value gap. Oh, my bad, y'all. I'm tired, man. I've been moving around all day, bro. I'm tired. But I'm trying to put this video out for you all. Give you all some value, man. But yeah, that's pretty much going to wrap up today's video. Basically wanted to break down these two entries on gold for New York and London session. Like I said, it's pretty simple, man. You looking for a buy between if you marked out your chart on the hour 4 chart or the daily chart and your bias is bullish. And if you trade New York session, kill zone, 8:30 to 11 a.m., you simply want to wait and see if price is going to take out London's low. And then you look for your entry. You want to be buying in this area. Everybody else going to be selling because they're going to think it's a break. But it's really a fake out. Same with this trade right here. Price took out Asia's low. Right there. You want to simply look for buys. So once price took out Asia's low, you wait for that high to be broken, and you got your entry. So that right there, my friend. I gotta keep on, y'all. I'm tired of that. That, my friend, is gonna wrap up today's video on gold. It's your boy Billionaire Brick. I hope this video was insightful to somebody. As long as I help one person, that's all I really care about. I'm not trying to help a lot of people. I am trying to help a lot of people, but I feel like as long as one person gets it, that's all that matters to me, because the person who taught me is only one person, and he's killing it. It only takes one person to change the world. So, with that being said, it's your boy Billionaire Brick, and we out. Go ahead and exit this bad boy. What we doing? Go ahead and exit this bad boy, and we out.